All right, welcome to part two of understanding price action. This is going to be an unedited, raw version of just me going through my slides here, switching back and forth to trading view and the charts. So, might be boring, but trading shouldn't be fun. So, stick with me. Don't know how long it's going to be, but let's dive into it. So, EMS video course, module one, video two. Let's go. Price action is simply the movement of price over time. Whether the market is trending up, down, sideways, left, right, zigzagging, whatever it may do that you'll see, all of this is telling us a story about the market's behavior. Let me pull up TradingView here. So, for example, let me delete these trend lines. As you can see here, right now, this is an uptrend, right? The chart goes from, or the candles go from the bottom left of the screen to the top right. Okay. Same here, right? We're going from the bottom left to the top, right? Here is a downtrend, right? We're going from the top left to the bottom right, right? Market's in a downtrend. And notice that we have a lot of previous supports, right? We create a consolidation, we shift down. We create a consolidation, we shift down. We consolidate, we shift down. Over and over and over again. Right? I'll even draw through, right? We go down, shift, down, consolidate, down, consolidate, down, consolidate, down, consolidate, down, consolidate. Until it starts to, work its way back to the upside there. And it does the same exact thing to the upside. The market moves the same exact way on every single name there is. Right? It goes up, it consolidates. It goes up, it consolidates. It goes up, it consolidates. It goes up, it consolidates a little bit. And it just does the same thing over and over again. And then here, as you can see, we have a period of consolidation, a larger period of consolidation. Right? This is when the market starts to just shift sideways. Buyers and sellers are kind of fighting each other. And we're just going back and forth. And these are the areas that you don't want to be caught trading in, which is why we wait for wedges, but we'll get into that in a little bit. Let's go back to the slides here. So the reason we focus on price action is very, very simple. It's the most direct way to understand what's happening in the market. And by focusing on how price moves, we can easily spot key levels like support and resistance, identify patterns, and therefore make trading decisions. So EMS focuses on recognizing these three price movements: uptrends, downtrends, and consolidation. So understanding these basic movements is really essential to identifying profitable setups. So I'm going to show an example here of support and resistance levels, and you'll see when price hits resistance, we prepare for potential breakouts or reversals, right? No one knows what's going to happen, but when you're looking at a resistance level, you can create a plan. And then when you have a plan in place with a proven statistic that it's either going to break out or reverse, at that point, you can, you have an idea of what's going to happen. You have a higher chance of being profitable. Okay. And then when price touches support, we expect possible bounces or breakthroughs to the downside, which provide great trade opportunities. So let me show you the chart. Pull it up here. So support and resistance, let's dive right into this. I'm going to just do a quick example. We can use DJT here from today. Pretty textbook move. Let me delete the chart here. So support and resistance, right? What is resistance, first of all? What does it look like? It's going to be these bigger points here on the chart, right? This is a resistance. This is a resistance, right? This is a big resistance. So these are the main resistances on the chart that I see right now, right? Resistance here. These are the levels you want to take note of, okay? Because why do we want to take note of these levels? Because if we approach that level again, it's most likely going to either bounce as a new support or act as a resistance again. Okay, so I like to kind of draw out those levels with a line, and just like this, and I'll set it at every single one of them. Right now, we kind of have, a system here. We kind of have levels, right? We have our levels drawn out here: 1728, 1968, 22, and 24.5. And the market moves like a ladder, like I just mentioned before, right? Up, sideways, up, sideways, up, sideways. So now price will consolidate underneath this level, and it will set up for an explosive move. I'll talk about this more a little bit later. Now let's go into support. What is support? So support is on the lower end. So this previous resistance will then turn into a previous support in the future. And it always happens, vice versa. So here's an example of support, right? Notice how we have one bounce and two bounce. We have another bounce here, which look how previous resistance turns into a new support. We can even draw support over here, right? Because we have one bounce here, two bounces there. And then we can also draw support right here, right? Previous support acts as support again. So you want to identify and understand, what support and resistance is in the trend, right? If we're in an overall uptrend, it's most likely going to bounce and push through. If we're in a downtrend, it's most likely going to push down. Let's go back to the slides now that you have an understanding of what support and resistance is. So in EMS, we use price action to identify setups like peak pressure, which is resistance, and a support, which is a base layer. So these are critical points where the market is going to react. It reacts every time. Right? It's either going to break out and see a big move, or it's going to reject. So, and understanding how this price behaves gives us a huge advantage, and it allows us to take advantage of those trading opportunities. So let's do an example of price action leading to a breakout. After consolidation, pressure builds up, which is why I always say higher lows, lower highs, right? It's creating that pressure for a move. The market will break through the resistance level, and that's where we enter the trade. And this is what we call the surge point or the breakout point in EMS. So this trade here that I actually had today was a perfect example. So, right, first you want to draw out, First you want to draw out the resistance points horizontally. Right, so I always like to draw the high. I like to draw the support below or the previous resistance, because if we come down here, it's most likely that this level right here is going to act as a support if we drop down here. Okay. So what are we looking for now, right? We're looking for that consolidation, that pressure building up in order to find a breakout point. Okay, so what we have here is lower highs, which is what I always mention. You've probably heard it before. And we have these higher lows or this flat bottom here, right? We're building this like coil here, right? Notice how the price action is getting tighter and tighter underneath this main resistance. This is what a textbook setup is, and I will take this trade every single time. Okay, so now what do we do when we identify a setup like this? Also, I should mention, I always trade on the 30-minute or the 1 hour time frame. No other time frames. Do I look at the other time frames? Sure. I always go into the 2 hour sometimes. The daily I take a look at here and there, just to get a grand scheme of where we are in the overall trend. Do I ever go to the 5-minute? No. Do I ever go to 10-minute? No. 15 minutes sometimes if it's later in the day, but majority speaking, 99% of the time, 30-minute and the 1 hour. So back to the setup. So now what do we do? Or I'll actually talk about entries and exits later. So I just want to go over identifying the wedge. Let's do another example. So here we have our resistance, and look how price consolidates. It does the same exact thing, right? We have these lower highs, we have a flat bottom here, and it gives us the exact same setup, right? Notice how after it broke out, but again, we'll go over that later. I just want to go over how to identify them and draw them. And the pressure builds up, and it always leads to a breakout, or not always, but it gives us a plan that we could put in place, right? Even here, we have a previous resistance. You always want to see this consolidation after a big move, right? We have a big move, and it creates that consolidation, right? Big move, consolidation. Big move, consolidation here as well, right? We have the lower highs, and we have like these flat bottoms here. I don't know. I wouldn't really draw it like this. I would really just kind of keep it like this. Connecting these lines here, you'll see as you progress, but connecting every single line sometimes is not in favor. Like this, I would not draw this one like this. Could, but the wick is a little weird to me. So this one, is fine like this. It's a little bit of a smaller wedge, but it is what it is. We can even go over another example here. So Meta, for example, I was looking at this today, looking at potentially trading this tomorrow. Right, we have support, 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 and look where we're consolidating also. Right, this previous resistance acts as a resistance here. It turns into a support, acts as support, acts as support, acts as support. So I'm looking for this to hold and potentially break out of this wedge here. Okay, so if this can hold this previous zone here, I would look to take an entry for a push through and out of that wedge. But just to show you, right, support turns into, or resistance turns into support, and vice versa also. Let's get back to the PowerPoint. So there's the example. So the key takeaway here is price action is the foundation of EMS. So by mastering the price movements and understanding how the market reacts at those key levels, you will be well on your way to spotting setups and making smarter trading decisions. So in the next coming videos, we're going to dive deeper into the momentum funnels, how to trade different types of wedges, how to trade breakouts effectively, where to set your entry point, where to set your price target, and where to set your stop loss. And then we're really going to dive into the emotional aspect of everything as well. But we got to lay the foundation here. So it all starts with reading price action and understanding the clues that the market gives to us. So let's get into the next topic.